But hello, everybody. I am excited for this one. And I guess why is that? I've been trying to think about why I'm excited for this one. This one, I think, gives me a little bit more opportunity to kind of reframe things, which is what I enjoy doing. And I think actually reframing your thinking is what leads to breakthroughs. So I think that the true breakthroughs in your process and your journey come from reframing your thinking. It's not from staring at a chart. It's certainly not from things like adding a parameter to your scan or using the 21-day EMA over the 20-day SMA. That is not where breakthroughs come in your journey, right? Those are just little nitpicky details that have an extremely low to negligible impact on your trading career. So I'm going to try to talk about what I think are high impact things in your trading. I'm going to try to talk about what, in my experience, has been a rough road on the way, on the journey here. Some highlights of that road. And am I the only one? Am I the be all end all of what the trader's journey is? Of course not. I mean, of course not, right? I don't even remotely claim that. Nobody claims that, right? I don't have the one trader's journey to present to you. This is from my point of view, based on my experience, 25 years, and also dealing with traders. So I'm just going to try to hit on key points. So let's just get into it, right? And as usual, before I start really talking about this, I'm going to talk about the usual kind of disclaimers that there is no certainty, right? Trading is an extremely personal journey. This is the way I start many webinars, actually, because it's just the truth. It's an extremely personal journey. Your personality is absolutely going to be front and center in your journey at all times, just the way it is front and center in your trading at all times. Starting this off, there is no right answer. There is no right trader's journey, just like everything else, right? So there's a little bit of irony in me even presenting something called the trader's journey, because if you guys know me well enough, you know that I don't sit here and act dogmatic towards you and tell you this is the way to do it. I mean, I am completely against that. So there's a little irony in even presenting something like this, but it's a roadmap. It's a mindset roadmap is what I would call it. And I think you'll be able to recognize some things that you've had trouble with and recognize some things that you might want to confront along the way. And everybody has their own nuances here, right? So there's no right answer, only a right answer for you. It's a journey towards confidence in your independent decision-making skills. I will say at the end of the rainbow here is decision-making clarity. It is not you in a 300-foot yacht in Saint-Tropez, right? The end of this trading journey is decision-making clarity. Does that mean you're right all the time? You know exactly what's going to happen next, and you're just making hordes and hordes of money every single day? Absolutely not. But what it means is that you have independent decision-making clarity that is independent of noise, input coming into you. You don't know what the decision is that will make you money at that moment, because it's always a probabilities-based endeavor, but you know what the decision is you're going to make. That is decision-making clarity, and that is the goal here. In my view, that is very much the goal, right? You will have decision-making clarity in terms of the environment, in terms of how you want to trade, how you want to approach the trade. And when you don't have that clarity, you don't trade, which is clarity in itself, right? So the journey here is ending with decision-making clarity. And it's not an ending. Much like my course, at the end of it, I'd say, this is just the beginning. Welcome to trading, reality-based trading. This is all based on reality, right? So decision-making clarity is the point you want to get to, which then will lead you to longevity, right? So as I think you guys get, if you've been with me long enough and you understand my personality, and most of you have been with me for a while, this isn't a journey towards riches. Say, like, this isn't the main thought. Is not, hey, I'm going to get rich, I'm going to get rich, I'm going to get rich. If you have that thought process, it's going to be really, really hard for you, because that's just not the way this works. Wealth is the result of longevity. It's the result of being in the market and having a decision-making process that is clear for years. For years. And there is no finish line. There's never a point where you just say, I'm done, right? What in life is like that, really? Any kind of endeavor, there's no just finish line. I'm done. The best performers in any arena in life, they don't reach a finish line. In fact, the people that are more successful than others at the very, very top of their game are working harder than they ever have, right? So there's no difference here, right? You never reach a point where it's I'm just going to be 100% successful. I'm going to wake up every morning, press all the right buttons. I know exactly what to do. It's so easy, no sweat, have a cup of coffee, make gazillions of dollars. That's never the case, right? That is just not reality. There's never a point where you get to this finish line and you never struggle. You're always going to struggle. It's just that you have decision-making clarity through those struggles. All right. So this presentation, just like everything else, is not a rule book. There's no one single journey. I'm not going to even remotely pretend like there is one path. There is one way to do this, but I'm going to hit on some key points, right? And to round out my little preamble here, there simply is no official roadmap, which is, it's the case of so many things in trading. When people ask me questions, I know they get frustrated with me saying there is no magic answer, but there simply isn't one. That's reality. And that's one of the obstacles people need to overcome. I see that constantly. So many people have such trouble understanding what trading is and what trading isn't. And we're going to get into that. Trading is something with no roadmap. There's no official roadmap. Nobody can tell you where you should be on year 2 or 3. I see people saying that, and it's one of the many, 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 many things that makes me cringe. Like, you should be in years 3 to 5, you should be doing this. I mean, that's baloney, right? Are you working full time? Are you trading full time? What are you focusing on? What are you having? What are the biggest obstacles to you? These are all going to be personalized things. What are you afraid of in trading? What do you need to overcome? These are all going to be personalized things. So to say that there is some rigid metric by which to define your progress, meaning in year 2.5, you should be here. And from years 2.5 to 4, you should be focusing on this. That's nonsense, right? Progress is individual. Think of raising kids. Did every one of your kids hit a benchmark at the exact same moment? No. And I will once again say breakthroughs come from reframing, not charts. Reframing, not charts. That has been my experience, and I firmly believe it. Is it an opinion? It's an opinion. But that is what, everything I say here is largely an opinion other than risk management, right? So finally, this presentation, please don't take every word literally. I feel like I have to say these things. Please don't say, but you forgot this, you forgot that, you forgot that. This is not meant to run through every single thought or every step or every discovery that will run through your head along the way. That is not what this is meant to do. That's impossible. It's ridiculous, right? It is simply a guideline. And what I'm trying to do is emphasize some key points from my point of view, obviously. And it's all based on my experience, 25 years as a trader who's gone through a lot of different things. And believe me, there was no roadmap. Nobody was even talking about a roadmap, as well as somebody who's worked with hundreds of new traders at this point, right? So I think I see some stumbling blocks that are in common with people along the way. I have one more preamble slide. So I like to be upfront with reality, right? I like to be upfront with reality and frame things the right way from the beginning, right? So stepping off the wrong foot would be, here's the trader's journey. Here's where you are the first 6 months. Here's where you are months 6 to 9. That's all baloney, right? That's what I'm trying to explain. This is the way I try to explain everything. It's why my course is called reality-based trading. I think it is a big differentiator, hopefully, at least in what I've seen out there, a lot of what I've seen out there and what I'm talking about here. And really what makes me tick, and I've said this before, is trying to reframe things, trying to get people unstuck from so many of the misconceptions out there that can keep you stuck for a very long time, right? So eventually you need to have your own decision-making clarity, which comes from your own thought process, your own ideas about the market. Personalized. Are they based on a framework? Yes, but there's going to be a lot of personalization. If you don't have that, quite honestly, there is no point in being a discretionary trader. If you never reach that point, if you never even want to reach the decision-making clarity point, and what you want to do is just follow people and just like treat it like a casino, and hey, I'm going to press this button, that button, one of these is going to work. There is no point in being a discretionary trader. I have made this point before. That's it, period. There's no point in it. If you're trading like a gambling hobby, I would say you're much better off with a DraftKings account and just go watch some sports, right? Entertain yourself. Go to a casino. And then finally, the hard truth here that most people don't want to tell you because they want to encourage everybody. And I do want to encourage everybody. But there is a hard truth here. Not everyone is going to be successful at this. It's just the way it is. It takes a certain skill set and a certain mindset. And the real reality, why not everyone is going to be successful with this, is because the overwhelming majority of people give up. Just give up. Done. I'm done. I'm not a gazillionaire after 2.5 years. I don't know why. I should have been. This person promised I would be, and I'm not. So I'm just going to give up. Forget it. Right? Guess what happens when you give up? You have absolutely guaranteed you will never achieve longevity, which is the secret. It's the real secret. Right? If there is a secret, it's risk management and longevity in the market. Those are the things that will give you the chance to be successful. All right, so there are some hard truths here right up front. Let's get into the presentation here. Now, of course, these are radical, crystallized, boiled down little phrases here of what can be a decades-long journey, right? So bear that in mind, and I hope I just had the preamble to kind of burst the bubble of fantasy enough to get you guys to understand where I'm coming from with these slides. So let's just go through on a top level basis, kind of the general overarching phases that I see here. You start off with absolutely zero independent decision making, right? You just have none. You just don't know where you're going. You don't know where to get a toehold in the market. You don't even understand where to begin to get a toehold in the market. It's just all it's unclear, completely unclear. Is the exact opposite of decision-making clarity. There is no decision-making process. There is no process from which to achieve any kind of clarity. Then you will move into, and I think this happens relatively quickly, actually. And I think it's kind of the first knee-jerk response is you get yourself into a certainty mindset. Somehow the market is deterministic. You become a follower. You follow a lot of different things. You have an unrealistic viewpoint of what market participants with experience, how they function. You feel as if they have all the answers, etc. Things like that. And I'm going to get into this. I'm just going through this in bullet point form here. And you get into an exploration phase where you're just trying just about everything. And that it's necessary, by the way. I think it's completely necessary to get into the exploration phase. But there's a big difference, and I'll get into it. There's a difference of exploring because you're personalizing, and there's a difference of exploring because you're completely lost. And we'll get into that. And I think this strangely comes with the ego phase, which I'll say, there comes a point where a little knowledge is very dangerous, right? And people start to learn a lingo, etc. And they think they're much further along than they actually are. And you take some serious hits in these phases, right? Then I would say you do transition eventually into a focus phase where things start to really kind of cone down into a point, to a fine point. You've had this world of swirling information and ideas, and they begin to focus. Eventually begin to focus. And some things that you've heard, some things that you've thought about, some things that you've experienced, begin to actually truly internalize, meaning you feel them. It's not just a phrase. It's not like, your parents saying to you, nothing good happens after midnight. And when you're 16, you're like, shut up, mom and dad. It's not like that. It's eventually you're a parent and you're like, really, nothing good happens after midnight. So you get real internalization, right? And then eventually, the pinnacle of this, which is just the beginning, but the pinnacle of this journey is decision-making clarity, where other inputs come in, sure, and you're going to need other inputs. You don't just sit there in a vacuum in front of your computer screen and pretend like the outside world doesn't exist. But that's not what makes your decisions. What makes your decisions is you, based on your experience, your internalization of concepts, the wisdom that you have gained over years of this process. Because this process, while I said there's going to be different lengths to this process doesn't take a week. This process doesn't take a month. It doesn't take a year. It can take a very long time. It can take many years. And you will go back and forth, right? But at the end of this process is decision-making clarity, where the answers come from you. The decisions come from you. That's not to say every decision leads to the outcome you want, but you are comfortable and clear making your own decisions without saying, oh, I need to go check with so-and-so, or I need to go check this first. I need to check that first. I have no idea what I'm doing. That kind of thing. Now, this would be, you can see I actually just flipped the slide, and all that was added here were these orange arrows. So if we were living in a perfect little algorithmic flowchart world, we could say this is the exact way that you will go through this journey, and it's just going to go step by step by step by step by step. And in 4.37 years, you're going to reach decision-making clarity. I am obviously being, sarcastic, but to make a point, right? Nothing in trading follows things like this. Nothing. Risk management. I can make you a flow chart for risk management. Nothing else in trading follows this, right? There's nothing that is so neat and tidy. It looks more like this, right? You're going to have scribble. You're going to go from one back to the other. Something's going to stick much longer. Something's going to be much more difficult for much longer than you expect it to be. You might have moments where you've got decision-making clarity. Then for whatever reason, you're back following because you've lost all your confidence and you're questioning yourself entirely. You may be exploring and then start to really, really, really focus. And then something derails you a little bit and you go all the way right back to exploring absolutely everything under the sun once again. So I think this makes, this little hand-drawn scribble illustration is what I'm trying to show is really the reality of it. It's a sandbox, right? It's real life. It's a sandbox. Your real life doesn't follow some flow chart, and neither does trading. Now, I understand, particularly there's a generational thing where, at least I see it this way. There's a lot of younger people who want everything to be a flow chart. And that's fine. It's just not reality. It's fine if it helps you with certain things, but it's not the world you live in, right? So there's a disconnect between flowchart land and the world you live in. And you have to come to terms with that. Otherwise, you're not understanding what trading is versus what trading is not. Trading, just like everything else in life, and those of you that are around my age or older, and I know plenty of you are around here, and I may be preaching to the choir, just having lived that long on the planet, you understand life is much more like these scribbly lines than a neat and tidy PowerPoint presentation with arrows leading from one thing to the other, right? So this process is going to be like that. You're going to, and this is why in the very beginning I was saying this is so personalized, because you may be somebody that gets stuck in a phase for much longer than somebody else does. You may make it further than somebody else does very, very quickly, but then have a lot of kind of reversion because you've really not developed any kind of confidence in what you're doing, and perhaps you had a lot of kind of, I won't call it beginner's luck, but perhaps you took a lot of risk and were rewarded for that risk, and then the bill comes due because you have not achieved consistency. So this is going to be a different journey for each of you because you have different fears, you have different goals, you have different personalities, you have different things that you're going to get stuck up on. And of course, I am by no means claiming that I have all of the answers here. I'm just trying to reframe some things for you, right? Because believe me, mine would have looked so scribbly that you wouldn't have been able to read the text on this over the past 25 years. And it took me a long time. And I think there are a lot of benefits to the fact that I didn't have social media. I didn't have YouTube. I see a lot of similarities with the people that are kind of my age in that they really rely on themselves. And you get to that point of I'm relying on myself a lot faster. And there is a lot of benefit to that. The benefit of the social media and the things like this service, which is what I'm trying to do, is that it can help you move quicker through this, gain some insight faster than you would otherwise. That being said, there simply are those things, and those of you that are parents where no matter how many times you tell your kids something, they've got to go bang their head up against that wall before it makes sense to them. And that's the reality, right? But what I'm always trying to do here is speed the process up, aid in trying to make it so that you don't have to make as lengthy a process out of the wrong decision, right? You don't have to be stuck in the wrong frame of mind for as long as perhaps I was, right? That's what this entire thing is about. All right, so let's get into kind of the meat and potatoes of this. And remember, I'm putting some bullet points on here. This is not going to go through every single thought that would go through someone's head. So this is the easiest one to go through, period, right? The zero independent decision-making process. This is where, you're just starting to get interested in the stock market. And believe me, there have been plenty of people that join this site that are in hardcore in this phase that join this site. And I wouldn't say it's too early, but you got a lot of work to do, right? You got a lot of work to do. You got a lot of reframing to do, right? But this is where you're like, I like this stock, and that's the extent of your analysis. And that's not to belittle anybody. I mean, I was there once. I was definitely there. I like this stock. I like American Express. I like using my American Express card. I like American Express. I was definitely that person. We're all that person at some point. You're like, my friend told me Tesla is a good stock, so I went out and bought a bunch. I don't know what to do with it. I guess I'm just gonna sit there and stare at it and hope it goes up. But somebody told me to buy Tesla, so I bought some Tesla. And like, that's the extent of your analysis. You don't know what analysis is. You don't know what decisions you're supposed to make. You're just taking random inputs and dabbling, right? I like Apple computers. I use them all the time. I love my Amex card, whatever. I go to Disney World all the time. That's what I hear from tons of people. I want Disney stock. I love their movies. I go to Disney World all the time. Those are the things that I'm talking about. XYZ stock keeps going up. I should own it. I heard from somebody, this is just keeps going up. You don't even have the faintest idea what a trend is. You can't even remotely start to define anything in terms of price action at all. I mean, price action isn't even a concept yet. And more important than anything else, you have absolutely zero risk management. This is when you're most likely you're in like the buy and hold phase, even though you don't even really call it that. What you're trying to do is basically, I'm just going to buy this, and then 15 years from now, I'm going to be rich. That's kind of the general way people start to get interested. You have zero strategy, right? It's the interest phase. I'm not going to belabor the point on this. I think you can all relate to it because generally it's kind of a roundabout way. It's kind of the way we all enter this, right? Unless you have parents that maybe really hammer concepts into you. I don't know. My parents weren't that way. And I found a lot of my cohort of people at my age, when they did get involved in the stock market, it was through this type of dabbling phase, right? So I don't need to spend much time on that because I think we all know what that is like, right? Then I think you get into another phase here, like where you begin to have some knowledge, and usually the knowledge comes into you by way of fundamental analysis or technical analysis or both. That's generally a foothold. That's where people start to dig their claws into the market a bit more, and they think a whole world is opening up here. Like the doors open. There's classical music playing. The sun is shining bright. There's this whole beautiful world that I've just stepped into, and I'm just going to read a ton of books, and I'm going to be able to outsmart the market. It's amazing. Fantasies are born in this spot, and this is really where I think people have a belief that the market is deterministic. And I will say that because it's not necessarily across the board, but I think it's pretty common that people at the beginning stages think that the market is deterministic. In other words, that it is not probabilities based. They think there is an outcome that can be gained here, that there is a solution. And the people that come from areas or professions of human endeavors where that solution is reality have the most trouble here, in my view. Software engineers, people in mathematically based fields, people like in physics, people where there simply is a right answer. Scientists, software engineers. If you can get a right answer and that's what you've done your whole life, I think you get stuck here. This is one of those things, this belief that the market is deterministic lasts a very long time in your journey. For some people, it's over. For some people, they get it right away. In fact, some people think of it much more as a casino. And that's a different way. You have to start to reframe it as, you know what? There's a way to make this not completely and totally random like a casino. And there is a way to actually trade responsibly. I think there are far fewer people that come that way into trading, as opposed to the people that come in believing that it is deterministic. And what happens early on is risk management knowledge is very cursory, if any, honestly, because the focus is on gains. Fantasies are born here. I'm going to 3x my money. I'm going to be a gazillionaire, right? That's what I'm going to do. I'm going to figure out a system. I'm going to beat the market. I'm going to do it. I'm smart. I'm going to do it. I'm going to beat it. I'm going to outsmart the market. All I have to do is learn it. I'm just going to read a bunch of books. I'm going to learn it. Risk management is not even part of that because the fantasy overtakes everything, right? In this stage, you're unable to take quick losses. Every trade is hyper important. People in the very beginning stages are really trying to strangle each trade. And I think this comes from just the fact that they haven't placed thousands of trades. They haven't really internalized that you're going to place thousands of trades over your career, So each one becomes hyper important. Each one this is the trade that's going to, absolutely be this huge breakthrough trade. I'm going to become fabulously wealthy with this trade. And it starts to place way too much importance on every single trade. And people try to, in those charts, try to outsmart the market. What this chart versus this chart, which is the one that I can outsmart the market with, instead of realizing that you have no idea which one is going to move, which one is not, right? Other than basic ideas, which for me, I've gone through many times. Trending market, right? Patterns where you've got range contraction in trending markets is where I want to enter. But those trends, those primary trends, is the overall fundamental guiding principle. So you've got these guiding principles and you've got ideas with moving averages, simple setups and things like that. But there is no magic to it. There is no magic to it. You're going to take thousands of trades. So I covered that I think people have a toehold in fundamental and technical analysis in the beginning. And I think a lot of people get seduced by technical analysis, particularly the cohort I was talking about above, people that come from a solution background, a one answer background. And I think these people believe trading to be that, to be a science. And I put this little F equals ma example on here to remind me to say, force equals mass times acceleration. It's Newton's second law of movement, right? For the, something you learn in high school. F equals ma is something that human beings discerned from that relationship that exists. If human beings were not on this planet, force equals mass times acceleration is a relationship that would exist, right? Human beings put some of these variables in there and were smart enough to uncover it, but human beings didn't create it. Those answers exist in the living world that we live in, right? That's not what trading is. It's not what trading is. Trading is a human-built market based on supply and demand. And if this sounds silly to you that I'm saying this, you don't see the questions that I get. And the questions that I get absolutely portray a picture of dozens, hundreds of people over the past 3 years that get stuck on this concept. They think the market is physics. F equals ma must exist. That the analog of F equals ma must be in the market. It's not true. The only thing that is true is current price. Current price shows you where price is. That's the only thing that's true in the market. Supply and demand, right? It's also not a geometry test. So if you get, and I've said this a million times, if you go on Amazon and get one of those mouse pads that has every single trading pattern, every single little setup, every little range contraction pattern under the sun, you may think, oh, that's all I need to know. I mean, it's right here for me. This is obviously all I need to know. I just need to reference this. It's basically a geometry test. I see a bunch of little triangles, I see a little base, and you start to believe that there's a deterministic bent to the market, and it's largely a little geometry test if you can recognize little patterns. And I think this is the phase where those things begin to really take root. People start to search for a perfect combination of indicators or charting scripts. They're always seduced by this looks this way, that looks this way. If I make the very low volume orange bars or volume bars a certain color like orange, that's going to be the secret. That's going to do it for me. Or, whatever volume bar color I make it, that's going to alert me to the mystery secret, right? So I think people start to set up their charts like it's a 747 cockpit. And there's some sort of comfort to be found in that. 17 screens, charts that are riddled with information, or maybe you've selected 3 or 4, and you're toning it down a bit because you've been involved for a while, but you still set it up like a 747 cockpit, and you just feel like, wow, I've got all this technology now. I must be under total control. This gives me control. That's what that gives you, an illusion of certainty. And I think this is when that really hits. You could give me, and I'm not saying there's anything unique about me, strip everything away except the stupid price charts, and I'm going to trade the same way. Strip it all away. I have things on my charts, volume, moving averages, Bollinger Bands. Junk it. Give me bar charts. Give me whatever. Give me line charts. I'm still going to figure out a way to just follow price, right? Because that's not where the secret is. If it was, it would mean nobody was a successful trader until recently when we had all these software programs. It's not logical, right? The more you have, the more you try to set up your charts like a cockpit of a fighter jet, the more you're building up your illusion of certainty. And I think this comes a lot from the things that are fed to you, because there's a lot of software programs out there. Use this scan, use that scan. Here's how you build a scan. Here's how you look at this and that and this and that. Take our seminar on how to build this and that and that and this and this and that. And it feeds on that illusion of certainty. They're just tools. They're just tools. That's all they are. Just tools. Those 4 guitars I've got sitting over there, they don't make me a better guitar player. They don't make me a better guitar player. They're tools. They're tools. Do some of those guitars make me enthusiastic to play? Yeah, they do, right? So some of you may get these software programs that make you enthusiastic, and that's cool. That's cool. They make you energized, give you the impetus to work a little harder. But they don't do it for you. They don't do it for you. This is a stage where people believe in magic scans and magic watch lists. I think one of the first questions that gets asked by people when they join a service that I've seen, and there was a point where I guess it's now almost 4 years ago, where when I was building a service or thinking of building a service, I joined, I don't know, 20, 25 services, maybe less than that. I don't remember, honestly, but it was more than a dozen, let's call it. And the questions I would see people asking, most of the questions, there's a few of them, right? And that's what I did with my frequently asked questions frequently asked questions webinar. But one of them that sticks out in my mind is, what's your scan? What are the parameters for that scan? That is what people like. That is one of the main things people ask, because at this stage, you think there is some sort of magic in having a list of 20 stocks through some sort of scan. And those stocks somehow are going to trade for you and make you money, right? And this comes from that certainty mindset, the deterministic view of the market. It's a certainty mindset. You're stuck in it. You think that getting a scan is going to change your trading radically. It is not. It is a low impact part of trading. It's a very low impact part of trading. What's a high impact part of trading? Trading in the right environment. Extraordinarily high impact. If you have not lost a ton of money over the past 3 weeks, high impact. If you have built out 27 scans over the past 2 weeks while losing money in a choppy environment, extraordinarily low impact, right? So this stage, certainty mindset, is what I would really call the overarching characteristic of it. There's a belief that there's a right answer, and it's not just a belief that you should have the right answer. It's a belief that one exists. So this is when people join services and they think the person who is running that service has all the right answers. They don't even remotely think about what that person really has, if they're even being honest. And let's give the benefit of the doubt to services out there for the moment. Let's say you joined a service that is a legitimate, trader that is eager to help, a good teacher, and somebody that is a legitimate, profitable trader in the market, right? So a above the board service. The belief is that person knows exactly what to do and is going to get the trade, is going to have 100% success rate and has all of the right answers, right? You don't even understand. It doesn't even cross your mind that what they really have is decision-making clarity. That's what makes them able to make decisions every day. They have decision-making clarity, right, wrong. The result of a trade is going to always be probabilities based, right? But they have decision-making clarity and you don't. But the way you view that is they've got all the answers and I don't, right? So a lot of the questions that come here during this stage is like, where do you put your stop? Because people believe there's a right place to put a stop. And there simply isn't, right? As I've explained many times in here, it's the dynamics that you want to understand. There is no right place. There's only a right place to put a stop for your risk tolerance. And you have to understand the trading dynamics involved. And being able to manipulate those trading dynamics is really, really what gets you to the advanced stages here. So as I just mentioned, during this certainty mindset, I think a big symptom of that is the belief that successful traders have all the answers and they're always operating from a place of certainty. And to be fair, this is reinforced by all of the Nostradamus baloney that you will find on social media. Not even just social media. Go on CNBC and somebody's making some ridiculous directional call with a target on it. In fact, the people that you would think are supposed to be the most thoughtful people, analysts, put these ridiculous price targets on things that are almost completely meaningless, right? Which makes it seem as if they have the answers. They have certainty, right? So there's a plethora of reasons why that's being fed to you. Or I should say there's a plethora of reasons why you have that certainty mindset, because it's being fed to you over and over and over again. And it takes a while to get past it. It's almost like, when you're a kid, you think your mother or your father can just they can do no wrong at a certain age, right? They're my parents. They know what's going on, right? It takes a long time to get to the point where like, they're just people. They're just people doing their best. It's kind of the same process here. You have to get to the point where you understand that all these people, even though they may project the fact that they know what's about to happen next, they're just people that don't know what the hell is going to happen next. And the actual successful, truthful ones are the ones just operating from a place of decision-making clarity. And they're the ones that are not going to pretend like they know what's going to happen next because they have that clarity and they're not full of crap, right? But this is the stage. This is the stage where the certainty mindset kicks in, and it creates a huge amount of obstacles. And to be quite frank, I think that even as I'll go through next stages, I think a lot of people end up stuck. They carry that certainty mindset with them. So it's a mindset of prediction. The market is something to be outsmarted, predicting the next move, predicting what's going to come next. I say this is going to happen next. And then if it comes even remotely close to that, I'm a genius. I'm glad I posted that publicly. That type of thing, mindset of prediction, right? Instead of what I always say, reaction over prediction. As your trader, you want to react over predicting. And this is really the follower phase too, I think it comes from ascribing characteristics of being somebody that knows what's going to happen next to people that have more experience with you, because you simply don't understand that what that person really has is decision-making clarity and you don't, right? So this is where a lot of people blindly follow as if they're in a cult. And I don't think there's anything more cringeworthy on social media than that, right? There are a few accounts where, there are maybe 400,000, 500,000 followers where somebody is an anonymous person and maybe once in 10 years have posted their actual real name, yet they have this cult following where people are fawning over them. Now, also, to be fair, some of those are created by that person to make it look as such, but there are people out there that will blindly follow because they feel there's certainty to be found. And the first entry into that world of certainty is to find somebody that has that knowledge, right? So, but I think this is an incredible step backwards and will keep you stuck. And this is why I am so personally against alert services. And this is why I actually call them alert disservices, because what they will do is keep you in that mindset. And even if you are there as somebody who is open-minded and just wants to honestly see how somebody executes, I've mentioned this before, that can be valuable, honestly. But seriously, it's valuable for about 2 days, right? You see somebody place 3 or 4 trades, you get the general idea because there's no major mystery to it. There just isn't. There isn't this crazy, shrouded in mystery endeavor that is executing a trade, right? So you get that idea pretty quickly. If you've never, ever seen anyone execute a trade, you have just no idea. I think there is a little value in seeing somebody execute a trade, right? But then that's it. But what I see happen on alert disservices is, and I'm just going to keep calling them alert disservices, is people will just use it as a crutch instead of developing their own decision-making clarity. In fact, I've seen services where the owner of the service literally says to people, I joined one of these services early on, and this person literally said, are you getting the alerts fast enough? Are you getting them fast enough to execute immediately? And people would respond and say, I get them as soon as I get it, I just execute. I don't even look up the chart. I don't think about it. I just execute immediately. I'm trying to execute as fast as you do, right? I mean, it is explicitly saying I put zero thought into it simply because this person, who frequently is anonymous, is sending me something. I'm going to risk XYZ dollars of my own money on it. Does that make sense? Does that make sense to you? That's when I'll go back to those earlier slides and say, if you don't even have an interest in achieving your own decision-making clarity, trading is not for you. You should not be a discretionary trader. You are in the gambling phase and you will likely just stay there, right? And you should just open up a DraftKings account. So there are many people that just blindly follow as if in a cult. And more than those alert services, this is true of different strategies as well. I see plenty of people that think anything that came out of Bill O'Neill's mouth in his life is a religious experience, right? And I'm not going to go into it because I don't even think religious experiences are religious experiences. That's me. I don't want to go into that topic. But I am somebody who is very, very, I'm very averse to following. Let's put it that way. And I think this has been something that has helped me in my life. And I think it's one of the qualities you absolutely need to have. You need to have self-leadership. You need to question. You need to question what's being thrown at you. That is something that is absolutely critical. And I see many people just blindly follow. Oh, follow through day happened. I literally just have to buy something no matter what it is because a follow through day happened. And that's what you're supposed to do. You're supposed to own something. That is just subjugating your individual thought. You will never, ever, ever achieve decision-making clarity if you get stuck into that mindset. If you get stuck into that mindset. And I don't mean to pick on Bill O'Neill. He was a great trader, trying to do a great thing, trying to pass on knowledge. People that do not have self-leadership or even understand that what you're trying to do is trade on your own at some point will blindly follow simply because they have this illusion that there is certainty involved. The certainty mindset, the follower phase. I hope I've made that clear. I think both of those phases can stretch on much, much longer than you may think. And I urge you all to be really, really honest with yourselves about this and take a hard look at it, because I think this is one of the areas where you can get really stuck. You can make a lot of progress in other areas, but you can still be carrying that certainty mindset and the follower mindset through. All right, so the next phase, I'll call it, and this, again, by no means is this some sort of absolute roadmap, but a general phase I would call is the exploration phase, and subsequently the ego phase, which I think is kind of interesting, but I do think it is what happens. So, and you may carry the certainty phase into this. You may carry the following into this, and I think you will carry it into this. It's not like you just immediately are out of that mindset. But there's a distinct exploration phase that takes place. You may start off, you join a service, whatever. You read a book, and it's like, this is the way I'm going to do it, letter for letter for letter for letter. Even though you go and you open up your charting platform, and you realize the reality hits very, very differently than the pages of that textbook hit you, right? That's a whole different story. But there's always going to be that exploration phase, and you enter usually you're going to try to follow something to the letter, and eventually you're going to explore more and more and more and more, right? And this is where I think there's two ways of exploring. This is what I mentioned in the very beginning, where one is you are still searching for the secret, because there's a secret out there. What you're doing is searching for the secret through all that exploration. You are still very much in the certainty mindset. It's just that you haven't found the certainty yet. So you're still on the hunt. You're still out there searching for that secret. The other branch of exploration is actually reframing it as personalization, where you are exploring to see what fits with you. Instead of thinking of it as I'm finding the secret, because there's a secret out there, it's reframing that exploration into what fits you personally. And that's where the real value of the exploration phase comes in. And I think everybody has to go through that. Day trade for a month. How does that fit with you? Position trade for a while. How does that fit with you? Trade purely on technical indicator crossovers. How does that work with you? You're exploring all different things. Don't take a partial. Don't take a partial until you're out to, 5R. How does that work with you? All of this exploration, instead of thinking that you're exploring because one of these is the secret, reframe it as I'm exploring different things to find what ticks with me, because things are going to work better for you than others, right? I think you'll know. One of the things that I think hits really quickly is you find out if you're a day trader real fast, in my opinion, real fast, right? So that's one of the things you can explore really quickly. But reframe this whole exploration process as personalizing. But this is where risk management begins to take root finally. Like, you've got those paths of exploration, but risk management finally starts to take root, probably because you've taken a bunch of losses. You may have blown up an account. Like most likely you've blown up an account, especially if you went down the options route. You've likely blown up an account. So that's where risk management begins to take root, because you can see the dangers involved. So it begins to be a real life problem where, like I said, this is where you hit your head up against the wall. Ouch. Let's not do that again, right? And that's the kind of thing I can tell you a million times. Gap risk is real until you get whacked with a 4.5% down day in the market, and you had 7 open trades and all of them dumped below your stop loss. You're not going to believe me, but it will hit you one day, and you will believe me. There's so much of this is running a service like this is like parenting, where my main goal is to keep you guys from getting hurt, and hopefully the things I say will make sense over time, and you'll be like, oh, I remember when my dad told me that. He was right. That's kind of the similar thing. So time frame alignment and confusion. This is where this happens in all of its glory, where you think you're a swing trader and you're looking at 5-minute charts to make your decisions because you think that's confirmation. These are the things that are just completely misaligned with your strategy. You think you're a position trader, yet you sell on like a 65-minute chart bar that moved below the last 65-minute bar. Your time frame alignment is completely out of whack. You don't even understand the concept of time frame alignment at this point. And it's one of the biggest issues. It's one of the biggest issues that traders confront, period. Also, I would say it's the biggest noise element of FinTwit, of Twitter, but mostly all social media, because everybody's on a different time frame. Everybody's using a different time frame, right? And this is where style drift is nearly constant. I'm following this rule. I'm following that rule. I'm going to be a day trader. I'm going to be a swing trader, and I'm going to be a position trader, but sort of a swing trader. I'm going to be a mix of all three. I'm going to be a day trader in bad environments. I'm going to be a swing trader in mediocre environments. I'm going to be a swing trader over the 20-day. I'm going to be a day trader under the 20-day. Style drift, right? Style drift. This is where fantasies hold back actual progress, and this can be true everywhere, of course, right? But I think this stage where you're exploring it really holds back actual progress. This is where people focusing on 3xing their accounts, they keep the boom and bust cycle intact by focusing on trying to 3x their account, getting too aggressive, not even understanding when you should get aggressive, completely being out of your time frame alignment. I'm going to take market's not doing much. I'm going to size up a day trade, even though I'm a swing trader. I'm just trying to 3x my account. I saw that this guy was up 800% on USIC. He was a day trader, so I'm going to day trade today because I want to 3x my account. Keeps that boom and bust cycle intact firmly, right? And this is important too. In reality, there are only a few ways to be aggressive. You're not going to, I know everybody I could talk about USIC and the pitfalls I see in USIC. There are good things, there are bad things, right? I don't join USIC because I've said this before. I'll just get this out of the way. I've never joined at USIC. First of all, I didn't even know it existed for like the first 15, 20 years of my trading. Second of all, it's not at all what I'm trying to accomplish. It is not at all what I'm trying to accomplish. Trading to me is not a competition. I'm not trying to beat somebody else. I'm not trying to get my name sent out there by this guy, Norm Zeta, who runs this. That has nothing to do with why I'm trading. Zero, none. And even though I have a service that would benefit from marketing, that is so against the way I trade and the reason I trade and my beliefs in why I'm successful trading that it doesn't even dawn on me to enter it. In any case, and not to mention the fact that there are people that absolutely fully admit, some of your idols fully admit to throwing their usual risk management hygiene out the window simply to try to win this competition. To me, that is not a trading competition. It is a marketing competition. In any case, these fantasies that are fed by things like that, focusing on 3xing your account immediately, and you think that there must be a secret out there. In reality, there's only a few ways to be aggressive because it is math. What are the ways to be aggressive? Size up, use leverage, or try to let a trade run aggressively. Those are the only ways you're going to be aggressive. That's it. There's no magic line in a chart. There's no magic formula of taking partials. There's no magic anything. Want to be aggressive? You got to take on more risk. You got to size up, some variation of sizing up. That's how you get to be more aggressive. The more aggressive you are, the bigger the drawdowns you're going to take, the bigger the possibilities of being a boom and bust trader for a long period of time are, right? And I think that's what so many newer traders focusing on, that aggression, they end up just holding themselves back instead of making actual progress because they think, oh, if I made 20% a year, I'm a loser. Like, how can I call myself a trader? I made 20% that year. Become profitable. Keep your money. Focus on that. Focusing on 3xing your account right away is going to keep you back. It's going to hold you back. And understand that there's only a few ways to be aggressive. And I'll get on this later, but that's where you can start to juice your returns when you have command over what you're doing. When you have command. There was a period of time where I was trying really hard to get into a firm. I was giving it shot after shot after shot. I probably took 7 or 8 trades in this thing. And I think I lost like $20 or something trying to position myself in a firm after 7 or 8 trades. And it's a volatile name. And I remember saying, this is what being in command of your trading dynamics is. It's not suddenly having 800% gains after being down 50%. It's being able to manipulate the way you're trading in a way that you don't take loss after loss after loss after loss after loss. That's the command, being in command of the trading dynamics that you are employing. Anyway, I will get to more of that later. So this is where people start to think, I'm not rich yet. I must have to start switching everything. This person must have the answer. That person must have the answer. Service surfing, style surfing. That's where this is. That's where this lies. Somebody emailed me once and said they were a member of 16 services. 16 services. How does that even make sense? How are you reconciling? I don't even think I could find 16 swing trading services. So my guess is, I mean, you probably could, right? But my guess is some of these were way out of alignment with this person's strategy. You get the idea, right? So this is where somebody sees success, whatever that is, right? Cartoon characters, success on social media, books, interviews, and they try to emulate it. There's somebody who was interviewed who was up 200% in USIC. I'm going to try to emulate everything this person does. I'm going to drop everything I know. I'm going to emulate everything that person does. This is where people are still very heavily invested in social media and probably don't understand the distraction that it is. Probably don't understand the distraction. Are there some signals that come in? Meaning, are there things you can learn? Yes. But I would say the ratio of signal to noise is extraordinarily low, right? This is where you start to question everything you do based on input from others. Every single axiom that you ingest changes your style. One of the things that, simple thing I'll say is, let your winners run. Let your winners run. Somebody will just read that. I've got to keep every trade I enter open. I've got to keep every trade I enter open. That's the secret, right? And any axiom like that, you'll see a new axiom every single day. That's where, there's 23-year-old traders here where they've learned enough to sound smart, and they get an audience and people will follow that. A lot of FinTwit is just axiom trading. It's just, here's this axiom. Here's this little dogmatic axiom you should all do. I'm guilty of it because I throw things out there, but I usually try to make them pop some sort of bubble. In any case, this is where you question everything you've done. You're in a heartbeat willing to throw away every one of your own independent thoughts because some axiom comes in at you from somebody, or you've watched some video and they do something one certain way. So you're just going to do that from now on, right? This is where you start to learn the lingo, but you don't have the wisdom. And you may start posting the lingo, right? And you start to inflate your ego a little bit. And it may be an area where you start to achieve a little bit more consistency on the upside. Maybe people start to hit the gas a little more. So when the market it gives you a tailwind, you may start to be able to outperform what you used to be able to do because you've understood some things. You've made some progress, and you've learned a little bit about what you're doing, and you may start to have a strategy where you can actually focus a little bit more when you've got a tailwind and take advantage of it, right? But then what happens is you give back all or more than all of your gains because you're still in that boom and bust cycle. The certainty mindset usually persists here because that's a big problem. It usually persists here. And I do think this is where it's hard to say where the ego takes root, but I think it starts to take root when you have that lingo under your belt, right? You've read a bunch of books. You've interacted with some big names on Twitter. Maybe they respond to you. That gives you an ego boost. It's all a game. It's all a game, right? I will firmly say that I believe that since the dawn of Twitter in 2008 or 2009, whatever it was, for trading, all it is an ego playground. There are people that are willing to actually teach you some things. Few and far between. It's an ego playground, right? And the people that have the biggest following are the people that just simply post the most. Is the reality, because you're just gaming the Twitter algorithm. That's not to say there aren't some valuable things on there, but that should not be what makes your decision-making process tick. Your decision-making process should not come from Twitter. That's a very distinct thing. I can get on Twitter and rifle through a bunch of bullshit, and it's not going to make me trade differently. Until and unless you can do that, you haven't reached decision-making clarity. So ego can begin to take root here, and I think it's because you start to learn the lingo, you start to interact with some people, you've had a little bit of success, and a little knowledge is a dangerous thing. Maybe you start talking to people that aren't traders, and you use a little bit of that lingo, and you start to feel like, I'm a trader. There's nothing wrong with that. You need to build up confidence, but there could be a point where your ego is getting in the way here of actually learning. And I think sometimes your ego can really keep you back. Your ego can be a huge problem. There's no doubt about it. All right, so moving on here. So I'm going to call this the focus phase. This is where some things really start to take shape. And I think you should be able to feel this when you get into this. Start to feel this phase where you have some true internalization, where those times where you've banged your head up against the wall, that is now internalized. Hey, I'm not going to bang my head into that wall anymore. I'm not going to do that because this happened when I did that and I didn't like it. So I'm going to stop doing that. And this now actually makes sense. Cameron, thank you. No rush. Thank you. So I underlined this one and bolded this because I think this is where you begin to see the market in a certain way and focus on specific style. And I'm really trying to say this a certain way. It's where you begin to see the market in a certain way. I know that's weird that I said it that way, but listen, every one of us comes into this with different preconceptions, different experiences, different understandings of the world around us, right? And there are going to be people that see the market in a certain way, and you need to. It will come with time, but you need to listen to that. For instance, I see the market as a series of trends. That is what has stuck with me. That is what makes sense to me. Trends. I see the market that way. I see consolidation patterns amidst trends as the way that I see the market. That's it. That's what sticks to me. So mean reversion trading. Somebody asked me today about Disney. Disney put in a hammer candle today. It is in a fierce downtrend. Put in a hammer candle today. It is below all key moving averages. There are people that will see the market as a mean reversion opportunity. There are people that absolutely see the market that way. I see a hammer candle. It has been down, beaten down to death, right? Disney's not going bankrupt. This is how I see the market, as an opportunity. I don't see it that way. It doesn't mean it's not an opportunity. There are opportunities everywhere. There are 1,001 different trading strategies, right? But you will eventually see the market in a certain way that resonates with you. And that's why the exploration phase is so important. But only if you take the right branch. If you take the branch where you're exploring because you're personalizing, you're finding what works for you, as opposed to the branch where you're exploring simply because you need to constantly be looking for the secret that doesn't exist. If you explore because you're personalizing, you will eventually begin to see the market in a certain way. It will make sense to you, right? There are some people that focus absolutely only on one setup. A lot of this are new traders, right? I've seen plenty of new traders that have this absolute obsession with earnings announcement trades. You know, I call them PED plays. Other people call them different things, right? But the day of the earnings announcement or the day after the earnings announcement, people are actually infatuated with that. And here, there is something that I think is relevant here, is because I think a lot of these people, and I've talked to a lot of these people, they've learned this from somebody. It looks sexy. It looks like you can make really quick gains, but it's not actually how that person sees the market. In fact, it doesn't make that much sense to them. And they don't actually get it, right? It's not the way they see it. It doesn't meet their risk criteria. It doesn't fit their personality. It's a little too random seeming. And I see what I'm saying here is there are people that are not trading the market the way they see it because they haven't discovered the way they see it yet, right? But they'll try something and think this is the only thing I should focus on. But that's actually not the way they see the market. This will come to you over years. Let me make that clear. You will begin to see the market this certain way. Maybe consolidation patterns, maybe straight up breakout patterns. It could be any number of things because there's 1,000,001 strategies out there, but you will begin to see the market a certain way that resonates with you. It doesn't come from a mouse pad full of setups and a geometry quiz. It comes from watching the screen for years. And I don't mean watching it for 6.5 hours every day, but watching price behavior for years. You will suddenly start to see the market a certain way. All right, I think I've hit that point. But that's when you will truly begin to focus on a specific style. It's not going to be because you read a book and you're like, well, that's clearly the style I should take. It's going to be because you've put in the time and you see the market a certain way, right? Anybody that has put in the time develops strange words for what they're seeing, strange little acronym salads for what they're seeing. That's when you know somebody's actually put in the time to actually see the market a certain way. This is also where some hard-fought wisdom begins to take root. You know, think of nothing good happens after midnight that your parents used to say. This is where some hard-fought wisdom really comes to take root because you've experienced it, not because your parents said it, not because it was in a book, not because some cartoon character said it on Twitter, right? This is where risk management not only is important to you, but it's the priority. It's the priority. You truly understand that risk management is your job. This is where that starts to take root because you've truly internalized that if you have risk management on lockdown, you can then operate in the market for decades. It's all about your risk management. You can approach a riskier trade than others as long as you understand how you're managing your risk. This is where you have a strong acceptance of losses, whereas earlier you had a very hard time taking losses. Every trade was hyper important. If it went against you, you took it personally. You must have done something dramatically wrong, and there must be an answer on a chart, right? This is where you take you accept losses. You begin to accept losses as just the price of paying business. This is what you're doing. You are a Major League Baseball hitter. You're going to strike out probably 60% of the time. Not strike out. You're going to be out. If you strike out 60% of the time, you're not going to be a Major League Baseball hitter, right? If you are not going to get on base, you're not going to get a hit or better 60% of the time, right? This is where you start to really realize quick losses are very, very, very common. Very common. It's what you do, in fact. It's the thing you do. If you wake up every single day, you're going to take quick losses. If you're trading every single day, you're going to take quick losses almost every single day, period. It's part of your job. It's a very big part of your job. This is where you start to really, really understand that. And that's why I say, if you're asking me between these two charts, pick one and do it, right? If they're that close, pick one, take one, have a logic. But if like all things are equal, pick one, take it. One of them, they may both be losers, right? It's probabilities based. This is where mindset becomes a very big focus, because I think it is 95% of the journey. Once you've got the nuts and bolts down, setups are the easy part. The geometry part of this is the easy part. Moving averages, finding out what consolidation patterns look like in general, easy. It's the easy part. It shouldn't take you more than 6 months. Now, I know those of you that have no experience with this are like, but I don't have any experience with it. And that's fine. There's plenty of information on here. I explain what I'm looking at every single day. Look at the trends and setups webinar. Look at the descending wedge webinar. You should get a feel for setups very, very, very quickly. It's the easy part. But this is where you become to terms with the fact that that's the easy part, because that's not where the secrets lie. There are no secrets, right? This is where you understand that the market is not a geometry test. The market is messy. It is not a simple little diagram of a bull flag. The market is messy. I will take a trade sometimes where it's not a laser printed, laser sighted type of setup. And people will be like, well, what'd you take that for? And it's because I have an understanding of price action and I'm taking a risk there. It may not be as tight and tidy and needy and tight and perfect as every little pattern and diagram that you see in a textbook, because the market rarely is. In fact, I was thinking about this. I could probably put together a study of the most textbook laser-sighted type of setups fail very commonly, partly because they're so textbook and so many people are focusing on them. So there's no magic watch list or scan starts to really take hold with you. You're internalizing that. You understand possibly, and I advocate this, you understand possibly that flipping through 600 charts is much more benefit than running 24 scans that spit out 10 new names every single night, right? This is where you start to really, really feel in your bones that there's always another trade, because you've felt it, because you've missed dozens, hundreds of trades, and that didn't kill you. There's always another trade. That really starts to help with your FOMO. This is where you really internalize environment is stronger than setup, which is one of the keys, one of the most impactful things to your trading. This is where you start to really understand that. If you trade in a bad environment, in an environment not conducive to your style, it is like entering a casino and seeing a sign on the wall from the management that says, we have set up all of our games to pay out 20% of the time that they normally would. They're going to pay out only 20% of the wins that they normally would pay out, right? So your odds are radically decreased. And at the bottom of that sign, it says, tomorrow we're going to go back to the regular odds. Thanks, the management. Do you sit there and stay? Do you sit there and stay, or do you come back the next day, right? This is where you understand the impact of that decision of operating in a conducive environment. It far outstrips any of your geometry setups. By far outstrips that. You will simply never be a profitable trader if you take a setup in any environment. You will never be a profitable trader. You have to understand how huge the environment is. This is where something like knowing your dance partner. This is going to be one of those things. I know a lot of you don't believe this, but at some point in your trading journey, you're going to be like, oh my God, he was right. Know your dance partner. That makes sense. And it's actually going to click, right? Being familiar with the names you're trading is an enormous advantage over having a scan that brings in 3 or 4 new shiny names every single day. Know your dance partner. Also knowing the volatility of your dance partner so you know what to expect. There will be a day where that clicks with you. This is where discipline comes into very sharp focus, which is really a mindset. It's overall the focus phase. True internalization is where concepts start to truly resonate, mostly through experience. because you have put in the time, you've put in the work, you've learned from what you've seen, you've made the mistakes, right? And if I can help you along the way, maybe break out of one mindset into the other along the way, maybe it goes a little faster. Maybe something can resonate a little faster. You can internalize something a little faster. That's the goal, right? This is where you truly internalize that this is a probabilities-based endeavor, where you understand what trading is and what it isn't, right? You understand that there are no right answers. There are only right answers for you. This is where that little ego that developed gets blown out of the water, because what you understand is what you're doing is following big money. Where's the ego in that? Why should you be bragging about that? You're following what the people with hundreds of millions and billions of dollars in their under management are doing. That's what you're doing. You're following that. You're following that. You're not creating moves. You're certainly not creating moves in the market if you're in USIC with a $20,000 account. You're not creating a move at all. You're following. You're a follower in terms of where the money is going. You're not a follower in decision making, but you're a follower in terms of the market. You're following the market's lead. You're following. You're reacting. This is where you begin to truly actually focus on personalization, and you understand what that actually means. Instead of it being something that goes in one ear and out the other, you actually truly understand that personalization is the key. Personalization in terms of risk management, personalization in terms of your personality. Your personality, you cannot hide your personality in trading. It's going to be there. It's going to come out no matter what. So you'd better personalize. This is where you start to really understand that. All right, the last slide. This is by no means the holy grail, but this is where you begin to achieve decision-making clarity. And it's 5:16. Thank you guys for sticking with me. So there's a few key points here that I think really kind of define decision-making clarity in my mind. Of course, this whole PowerPoint is in my mind. So we know that, right? So trading dynamics, that's particularly, how close is your stop loss? What's your risk to reward proposal, right? What's the proposition there? And that target is always in R form. What is the proposition? What's the asymmetry? How aggressive are you going to be? How tight is your stop going to be? Those are absolutely critical dynamics. And by the way, that is the math I was talking about earlier that is aggressive trading. That's the thing that makes you aggressive. You want to be somebody that makes 300% in a year? You're going to have to be aggressive. You don't get outsized risk-free returns. It's not a thing. What do I mean by that? You don't just take safe trades. You don't just take little tiny safe trades, where you're cutting your losses super fast, and you never put on any size. You're not really stepping in the way of anything. You're not really taking any risk. You're not going to have outsized gains doing that, right? At the same time, you're never going to have consistency if all you do is hit the gas. This is something I've posted before, and I think some of these things just don't hit, right? You're not going to have outsized returns on risk-free trading, and you're not going to achieve consistency with oversized risk trading, right? Those are two different ends of the spectrum. If you're taking tons of risk all the time, you're never going to be consistent. If you're never, ever taking any risk all the time, you're absolutely, of course, never going to achieve outsized gains. Of course, right? And it's your manipulation of the trading dynamics at play here. I used that Affirm example earlier because I was able to keep myself from getting chopped up while trying to enter a volatile name 7 times. In fact, if you ask me what I was most proud of recently, that might be one of those things, because I'm able to manipulate the trade dynamics. And what do I mean by that? My risk tolerance, how tight my stop is, how much I'm going to allow myself to take a drawdown or not. If I'm going to re-enter a name, these are all trading dynamics. The size I'm going to take on, that was, to me, a moment where I really showed that I'm in control of my trade dynamics, right? Because I did not allow myself to get chopped up in a volatile name that I was trying to enter repeatedly. Now, obviously, your goal is to not get chopped up. I mean, that's not nobody writes a book on that's like, I'm the master of not getting chopped up, even though it would make for a good book, honestly. But no. Now, the trading dynamics, mastering the trading dynamics, is what's going to let you get aggressive. I wrote on here, this is where you can juice your returns, because what you can do is approach a trade with a clear understanding of dynamics. Now, when people ask me, where should I put my stop? Where should I put my stop at 3%? Should I put my stop at 4%? There is no right answer, but understanding the dynamics of it and understanding your sizing and when you want to get aggressive, That's where you can get aggressive. Having made every mistake under the sun, asked Tobias, what made you keep going and push through all the frustration? Because I was perseverant and because I'm stubborn. Honestly, in the beginning, I talked about this. I'm not a follower. Like, good luck getting me to follow you around blindly. It's not going to happen. And I think that is one of the qualities that lends me to trading, honestly. And if you don't have any of that, it's going to be a hard road for you, right? I'm perseverant. Am I going to fail at this? Hell no, I'm not going to fail at this. Am I going to give up at this? Of course I'm not going to give up at this. That's what keeps me going, because that's in me somehow. It's got to be in you. It's got to be in you. I've never given up. I don't give up. I was in architecture school. I remember being in architecture school. It was 4 o'clock in the morning. I was exhausted. I hadn't gotten sleep in like 4 days, right? And there were a couple people talking about how, oh my God, did I make a mistake in this? We were all exhausted. I'm not going to get into this, but I remember thinking to myself, there is no way in hell you could get me to quit this program. Like, there is no way in hell you could get me to quit this, because there's no way I'm living with that, right? That's how I made it through, honestly. Just keep going. That's how you make it through. You have to have that in you somewhere. There's no like thing I can point to, like read paragraph 4B. You have to have it in you to not quit. What I can tell you that is out there is that as long as you don't quit, you can achieve longevity. Quitting is the part where you absolutely short circuit any chance at longevity. Jacob, any aha lessons that helped you advance from focus phase to decision-making clarity? Yeah, so I mean, those phases are not written in stone either, but I'm kind of going through them right now. Like, that is the point of what I'm doing here. So I think, this comes from my experience. So this is all of them, because this comes from my brain. So all the things I'm saying here, get rid of that certainty mindset, get rid of the follower mindset. I think a big lesson for me is that I started to really understand the personalize early on, because I'm not the follower. I'm not a follower. I'm not somebody that's going to sit there and retweet somebody and be like, this person is unbelievable. I'm not a follower. That's not the way I roll. It's just not. That's not to say I'm an egomaniac. I just think that questioning things makes sense to me. Question it. Find it out for yourself. Doesn't mean I don't learn from people. Definitely learn from people. But if you are somebody that is just a blind follower, not for you. So aha lesson would be, for me, in addition to all the bullet points I'm going through, which came from me, I would say personalization is a big one. Truly getting that you need to personalize this, because you are different than me. You're different than Tobias and different than Alex, right? Everybody's got differences, and your personality cannot be hidden in your trading. You can't hide it. It's going to come out. So confront it and make it work with your process. Rick, I joined your service about 8 months ago, listened to every video on your occasional rants, and I can now say with confidence that this slide describes me. Life changer. Thanks. Well, I mean, that gives me good feedback. I appreciate that feedback, Rich. I doubt it changes Rick, I'm sorry. I doubt it changes your life. Let's say that let's hope that it does. Let's hope that it gets you out of some mindset issues and reframe some things, right? Okay, so the trading dynamics is where I really was. That's where a lot of this, that's where your juice, your aggression is going to be able to come from. And it's from mastering the simple trading dynamics. There's nothing crazy here. And it's not about watching every single interview that Richard Moglen does. There's value in them. It's not about that. You're not going to say, oh, a minute 48 in so-and-so's interview, that's what did it. That was the secret. That's the secret I've been looking for. You've got to personalize all of this. If you want to get aggressive, you have to first master how you employ trading dynamics. And you do not learn how to master how you're using trading dynamics by reading, by watching. You master it by doing it. You master it by doing it. Want to take, instead of asking me, should I widen my stops out? Widen your stops out. Do it. What does that do to you? How do you feel? What do you notice? Should you tighten your stops up to an insane tightness? Use 0.25% stops. Do it. See what happens. That's how you learn it. That's how you learn it. That's how you learn what's going to work for you. That's how you're going to learn how to exploit it. If I want to get aggressive with something, I will take a tighter stop. I will size it up. I will let it go. I will not take a partial super early. I'll let it go, right? That's using dynamics. That doesn't mean it's going to work, but I know when I want to do that. I know how to do that. I know how I want to do that. And it's not because there's some back-tested science to it. It's because I have done it for 20 years. You don't have to have done it for 20 years to get used to trading dynamics. And when I'm talking about trading dynamics, I'm really talking about your stop loss, how close your stop is, how aggressive you're getting, meaning sizing. Master that. Master that. Know what it means. Try different things. Know what it means. The only way you're going to get comfortable with it, confident with it, and understand what they are is by experimenting with it. You can't read a book and know it. You can't watch a video and know it, right? You got to get in there and do it. Now, I'm not saying risk a ton of money, but see how things work with you, right? As I see some people that want to, I want to just let a trade run in the 9, but for whatever reason, I keep taking it off. It's in your head, right? Say to yourself, I'm going to put a trade on and I'm not going to take it off until it goes below the 9-day moving average on a close. Period. Just try one trade. Use pizza money. Just do it. See how that makes you feel. And then, if that resonates with you, then maybe you are more of a position trader. Maybe you want to take more position trades. The thing you will start to realize is if I put on 5 or 6 trades like that, then when there's a drawdown, I'm going to have a deep drawdown. And the only way you're going to know how that affects you is by doing it. That is the only way you're going to know how that affects you. And your personality could be very different than mine. I do not like taking 15% drawdowns. The deepest drawdown I've had all year is 4-point-something% from peak to trough. 4-point-something%. That's the deepest drawdown I've had all year. That's the way I like it. And I can still get aggressive. So your losses are taken easily. It's second nature. You don't even think about it. I don't even think about it. I take a loss. Who cares? I don't think about it. I don't sit there and think, oh, this is another, it's 5:30. So I know this is getting ridiculous. I'm going to wrap this up soon. But somebody's probably going to ask me, what about journaling? Journaling is great in the very beginning. When you're making some pretty obvious mistakes, I think it's worthwhile to do. After 25 years, I'm going to say that it's not the most important thing I'm doing, right? I will take them by second nature. And the reason I thought about this was because I will take a loss and then I'm not going to go back and do a post-mortem on it and think that there is some mystery here that I should discover, because I've done this over and over and over again. If my logic is sound, if my mechanics are sound, if there's no flagrant violation of what my trading logic is, then it's just the market. It's the nature of the market. It's a probabilities-based endeavor. Next, boom, take the loss, second nature. I don't need to do a post-mortem on it, right? Also, I can re-enter very easily. This is something I see people have so much trouble with it because I think they think that there is so much certainty involved. I took it, it didn't work, therefore it's gone. It's just gone. You can re-enter. The market is a breathing mechanism, If there is nothing written in stone, you can re-enter. It becomes second nature. There's part of mastering trading dynamics. That is something you can do, and it helps your decision-making clarity because you can always just re-enter. You don't have to have that stranglehold on something. You have a very strong focus on keeping gains, very strong. This is why when I see the market in a drawdown, I'm actually, I'm feeling pleasure. It's a little bit of Schadenfreude. The market is going down, but my account is not. That is pleasurable to me. It's a strong focus on keeping my gains. Keep my gains. That's where the real progress is always made. At the end of the year, I may show my equity curve, and you will see the points I'm most proud of is where the indices are sloping down and my equity curve is basically going flat. It may be sloping down a little bit, but not nearly as much as what the indices are doing. Getting the upside to move in the right direction is easier. Keeping my equity curve relatively flat when the market is sloping down, that's what I'm most proud of. And you will begin to focus on that. This is where you achieve alignment with your strategy. You really are operating on the right time frame. You're not staring at 5-minute charts in a position trade because you think that's confirmation, which is nonsense. You're really in alignment, and then not just in alignment with the time frame, which is critically important, but you're in alignment with how you're managing the trade, right? And look at my trade management webinars. Look at the webinars on position trading. You're taking your gains on a swing trade near where your target is because you understand it's a swing trade. You're not holding on for eternity and letting the name come right back in you and erase your gains. You're holding above a key moving average for a position trade instead of taking gains because it's a different strategy. You're working in alignment, right? You're also working efficiently, which means waiting for your spot, waiting for the right environment. This is a huge focus at this point. You're able to use trading dynamics to move aggressively or defensively, tactically, right? It's well defined and you execute well. Aggressive, I'm going to take partials further out. I'm going to take smaller partials. I'm going to size bigger. Defensive, I'm going to take partials very quickly. I'm going to take bigger partials. I'm going to protect break even mercilessly. Those are just examples of tactics, right? And you master those things. Losses are easily taken here. It's a full internalization of what trading is and what is not. Certainty mindset is gone. It's gone. That's a joke. And you can see other people that are stuck there. and you're not going to make fun of them because you know it's a real thing that people deal with. You will ignore the noise, but you're not going to look down on them, right? It's one of the things of being a mature trader is you see everybody going through different periods of the struggle, and you know how to tune out the noise, right? It's a full internalization of what trading is and is not. Probabilities-based endeavor where you have a framework based on how you see the market and how you've personalized things like your risk management to your trading, right? And it is not a deterministic force equals mass times acceleration Newtonian law type of system here, right? And you've also fully internalized an understanding of your chosen style and the environment required for it, right? Swing trading, position trading absolutely needs follow through. I go through the ingredients of a poor swing and position trading environment all the time. You will fully internalize this to the point where when those ingredients aren't there, you have no interest in trading, right? Because you're not just trading action. You're not an action junkie. You have decision-making clarity. You will reach that point. This is where you rely on experience, self-leadership, and self-awareness. Experience, self-leadership, self-awareness. Without all of those three things, you'll never get there. You'll never get there. If you're somebody that wants to perpetually follow, never going to get there. Self-awareness, you have to clue into that. Experience will come to everybody. Put in the time. This is where you also have the wisdom of varying market cycles, which happens over time. But because you've seen different market cycles, you don't think the whole world is a bull market or the whole world is a bear market or that you're a genius, right? Because in a bull market, that phrase, everyone's a genius in a bull market, right? You have that perspective now. Most of all, you understand that each day is new. I can wake up as a trader with 25 years of experience and take 5 losses in a row. It can happen any day. It doesn't make you bulletproof by any stretch of the imagination. I can make mistakes. I could overtrade. It's a very unique thing, right? Because if you're somebody who is incredible, like I always go back to guitar. If you're somebody who's been playing the guitar for 20 years, I can pick that thing up and you know I played it for 25 years, right? Like that's a given. You'll know I've played that guitar for 25 years. I pick it up. It's not like I'm going to forget it or screw it up. But I can start trading and may take 4 losses in a row and you'll be like, this guy doesn't know what the hell he's doing, right? That would be a poor kind of way of looking at it, obviously, because it means you don't understand trading. But I think you get my point, right? Each day is a new day. It's always a work in progress. There's no certainty. And really what you're doing is trading price action with an understanding of market context. Environment over setup. You're trading price action. The price action that speaks to you, right? The way you see the market. That's what you're trading with an understanding of market context. So you're not making decisions in a vacuum. And like people will ask me, should I take this trade, that trade, this trade, that trade? You have to have market context too. Engage your brain. This is where outside noise is nearly non-existent. I fully admit I go on Twitter largely because that's my only advertising for this site. If I'm going to have this site, somebody's got to join it. Otherwise, why have it, right? So I am so not a marketing guy. It is so anathema to who I am as a person. If any of you people are marketing gurus, hit me up. Maybe you've got an idea. I hate marketing personally, right? But I will go on Twitter. I fully admit this. I go on Twitter to engage an audience a bit, and maybe they'll look at my site. That's why I go on it. That's why I go on it. I've met a handful of people in real life from Twitter. That's what I find valuable. That's what I found valuable. The rest of it is noise. Not because all of it is by definition nonsense, but because I have my own decision-making clarity that I have. It's mine, right? Name other people out there. Mark Minervini, is he going to get influenced by something somebody else is saying? I'd say no. And name a bunch of other traders out there. They're not going to like randomly go on Twitter and be like, oh, you know what? I'm an idiot. Like this all this I've been doing for 15 years is just BS. I'm a moron, right? Outside noise becomes nearly non-existent. I read news articles. I keep abreast of actual, topics that affect the markets, obviously, because I don't live in a vacuum. But my signal is price and the way I see the market. And that has to happen at some point. I'm not saying you end up, not ingesting anything, but you won't be ingesting things as a signal. You won't be, you won't be in that trap where you're like, all right, I'm taking this trade. I'm taking this trade. All right, it's not moving in my favor. What am I supposed to do? What am I supposed to do? I'm going to go on Twitter and see how somebody else is handling this. You're not going to be in that mess, right? This is where the layers have been peeled away. People work for years to build up layers. Your 747 cockpit of charts is where that stuff starts to get peeled away. It's where all the stuff that the hundreds and hundreds and hundreds of pages of stuff you read, the dozens of hours, the hundreds of hours of videos that you watched, it gets peeled away to simplicity, where you have decision-making clarity in your process with the things that you've chosen to focus on, right? And this is where you understand that the learning and ever-increasing self-awareness never ends. It never ends. The learning never ends because what you're really doing as a trader is learning about yourself. You're also learning about different market environments because you're seeing them. Things rhyme. Like, have I ever seen an environment where we had a pandemic and then runaway inflation? No, because it didn't happen. It didn't happen before, right? Did I ever see a situation like 2008? No. Have you seen panic? Yes. But the nuances are always going to be different because the world is turning, right? The world is turning, and we're going to see a different market confront different situations differently, right? So you're always going to be learning simply because you're on this planet and you're watching the market. And to me, that's fascinating, right? And I think, as a just completely side note, that better be fascinating to you, or this is going to be a tough road, because that's what it takes. It takes some interest in doing this. And you're always going to have ever-increasing self-awareness. Are you more self-aware now? Throw training away. Are you more self-aware now as a 40-year-old person, 50-year-old person, 60-year-old person, 70-year-old person, whatever you are, than you were when you were 15? I think you all universally say yes. That's true in the market as well. And that self-awareness goes a long way, because what you're doing is tailoring your process. You're always tailoring your process to your personality. You may be a person that really can thrive as a position trader, where you have maybe 2 or 3 position trades that make up the bulk of your gains each year. The rest of the time, you're treading water at best, but you're able to hold on to some of these trades for a long time because you can take big drawdowns. That's up to you to figure out. I'm not going to tell you to do that. That's up to you to figure out. So let's wrap it up. 538 must be a record. That's probably not. But once you reach decision-making clarity stage, it doesn't mean you permanently reside on a yacht in Saint-Tropez now, right? It's not what that means. Wealth growth will follow, sure, if you can achieve longevity, and that's the goal, right? What this means when you're at decision-making clarity stage, when you are independently clear with your decision-making and you have really mastered how you use your trading dynamics, it means you're a trader with your own conviction and your own hard-fought skills and wisdom. And that's a big, big deal, right? It's a big deal. It means you will have great years. It means you will have good years, and you'll have mediocre years. You're never going to have a blow up year. It's not going to happen, because risk management is locked down. You understand a good environment and a bad environment. You know when to take your shots. You've mastered the way you see the market. You're not going to have a blow up year. It's not going to happen unless unless the stock market blows up, right? Other than that, you're not going to have a blow up year. You're going to have great years, few of them, maybe more than a few. You're going to have good years, more of those. You're going to have mediocre years. You're definitely going to have mediocre years. You're going to have years where you don't outperform the indices. It's going to happen. But you are a trader with your own conviction and wisdom and your own decision-making. It means you'll never, ever take a huge loss. It means you can sit out easily when the market is not conducive to your style. You've developed that discipline. That is fully internalized. It means you will continue personalizing throughout as long as you keep trading. And most of all here, it means you have the ability to achieve longevity in the market. Just stay with it. Stay with it. It means you've reached the point where you will achieve, and you can achieve, longevity in the market. And that is huge, because that is actually what creates genuine wealth. It's not one big, enormous year taking ridiculous outsized risk to try to win a competition and get your name published. It's longevity in the market at a level where you have decision-making clarity. That will create genuine wealth. It will. But that wealth is a result. It's a result. All right. So at this point, you have fully moved past the fantasy stage into the reality that is now within your reach. And I would firmly argue, because I've lived it, that the reality is actually far better than that get-rich-quick fantasy. It's really much better. It really is. You can do this for a lifetime, and you can achieve longevity, and you can change your life. Plus, it may be something that is truly fascinating for you. It's a way to take power into your own hands. But it's certainly not for everybody. It is certainly not for everybody. Certainly not for everybody. Thank you, guys. I appreciate the compliments. Thank you, Marius, Hans, Saba, Steve, Robert, Martin. Thank you, guys. Excuse me. I really appreciate you guys joining me and for listening here. And I don't espouse to have all the answers at all, right? But I am confident. I am confident that some of these things may reframe some things for you and may help you out. And that is what I'm trying to do here. That is the name of the game here. That's the goal here, right? So hopefully that will, some of these things will hit home. And thank you guys very, very much for supporting me and for sitting through here for an hour and 42 minutes. We'll be back again next week. Thanks, Matt. This was great. Thought I was going to have a ton of questions, but you covered topics. Interesting. I took the questions right out of your mouth. I appreciate it. All right, guys. That's going to do it for me. Have a fantastic night. Go hug your kids, hug your spouse, feed your pets, do all those things. Take care, guys. I'll see you tomorrow. Take care.